What's good, everybody? It's your boy KG London, aka the London Session Specialist, aka the Wolf of Wall Streets. And I'd like to welcome you guys to my prop firm journey, the game plan episode one, right? So, the main reason is to just document my journey on becoming a fund manager, right? So, it's also just to inspire people and show people it's possible if you have the right mindset and the right approach, right? Because I believe prop firms is just, having the right mindset, and having the right approach, right? Regardless, just these two things can actually, make you pass the challenge and take you to a whole new level, right? So we're going to be starting with a 25K US dollar account with which is a five-figure account, right? And we want to grow it all the way to a seven-figure account, right? We want to grow it all the way to a seven-figure account. So obviously after we pass this five-figure challenge, we wanna use the same profits to buy a six-figure challenge, and then from a six-figure challenge, we just wanna grow all the way to a seven-figure status, right? So yeah, so just want to take you guys through all this journey, right? So I'm just gonna be posting everything, all of the wins, the losses, the challenges, the mental, the mental challenges that I'll be going through, everything. I'll be documenting everything on my YouTube. So it's just going to be a series, right? Taking you guys through all this journey, right? So yeah, let's get into it, right? So let's get into it. Let's get into it. So this is the game plan, right? So this is the game plan, and I'm just trying to put you guys on the mindset that I have coming into this whole challenge, right? So first thing first, I'd like to take us back to this key thing, trading. Just let's just remind ourselves, right? Trading model, trading strategy, right? So what is trading? Let's take it back to what is trading, right? So trading is a game of probabilities, right? So remember, it's all about probabilities. We are working with probabilities here, right? So when dealing with probabilities, we need to understand that we can either win or lose. Once we click that buy or sell button, we understand that we could win, we could lose, right? Why? Because it's probabilities, and that's what trading is, right? So, but by maintaining a clear head and following a well-defined trading model, we can increase our chances of succeeding over the long term. Keyword here is chances of succeeding over the long term, right? Over the long term. So if we keep a clear head and then we follow a well-defined trading model, we can actually, increase our chances of succeeding over the long term. Keyword long term, not just today or tomorrow or this week, but over the long term, right? So now let's just talk about a trading model, right? So a trading model is a set of rules and guidelines that traders use to make decisions about buying and selling an asset, right? So so a trading model is basically, having rules and guidelines, right, that guide us as traders, right? So whether before we buy, before we sell, we need to follow our guidelines, right? So the goal of a trading strategy or a trading model is to increase the chances of winning over a series of trades. This is very important, guys, especially with prop firms, right? It's to increase the chances of winning over a series of trades, over a series of trades. That's the key thing there, right? Understand that we're not trying to like pass this challenge with one trade so that we can, post on social media and say, I made it on one trade or I made it within an hour. That's just for marketing and trying to sell something, right? But if you are looking at the longer vision of becoming a seven-figure, fund manager, understand that it's always going to be a series of trades that are going to make you a successful trader or a profitable trader over the long term, right? So, however, on a trade by trade basis, the outcome is random, right? So, understand that if you take a trade now, it doesn't mean the next trade that you're going to take is going to be profitable or it's going to be a win, right? You can take a trade now and then you lose another one, and then you lose another one, and then you win another one, So, on a trade by trade basis, the outcome is random, right? So, that's why put we don't want to increase our lots on one trade because we're not sure if that trade's going to be a winner. Even if it looks clean on the charts and you think, yeah, this is the one, understand that on a trade by trade basis, the outcome is random, right? But on a series of trades, we have a chance of winning, right? So therefore, the model is meant to provide a framework for making informed decisions based on market data and analysis. So obviously you need a model that's proven to work, right? And at least you need a model that's at least 30%. That's winning 30% of the time. At least you just need a model that's 30%, that's 30% of the time. And I'm not really going to explain models here, right? This one is a whole new, as a whole, chapter on its own. It's a whole course on its own, right? Having a trading model, it's a whole course on its own. So we'll take it further and then talk about risk management, which is another key thing, right? So risk management, right? So risk management is the cornerstone of trading, right? In simple terms, risk management is about ensuring that you don't lose all your money while trading, right? Keyword, lose all your money while trading, right? So it involves being aware of the risks involved and having and having a plan to deal with them, right? So by implementing a sound risk management strategy, we can reduce our losses and increase our chances of winning in the long run. So this is the key. Long run, guys. Always, 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 always. So as a trader on a proper account, right, it's crucial to view yourself as a business owner, right? You should consider your losses as part of your business expenses, but always remember that risk management is the key to success, right? So if your business expenses exceeds your profits, your business will fail. If you have more expenses than your profits, the business is done. You're shutting down. The profit is down, right? So we should always manage our risk, understand that you need to have like small expenses and then, have big profits, right? So that you can keep the business afloat, you can keep the business running, right? So we must set strict limits on the amount of capital we are willing, keyword willing, to risk on a trade, and adhere to these limits to avoid significant losses, right? So it's important to note that risk management is not a one-time event. This is also key. Risk management is not a one-time event, right? But rather an ongoing process, right? So the risk to reward ratio is crucial, is a crucial factor to consider in trading, right? And a solid risk management plan can assist us in achieving a positive ratio while maximizing our exposure to risk, right? So it's all about risk management, guys. Risk management, and then another key word here is risk to reward ratio, right? So down here, and also I'm just explaining all of these so that we can just uh burn it in our heads, like just to make it come back a little, because it's like we always forget whenever we into this prop firm accounts. It's like we just there to quick, but not understanding that prop firms are actually more like an investment, right? A prop firm is more like an investment account, and we need to treat it like one, right? Hence, we had to go back to what is trading. We need to understand that we're working with probabilities here, and then you need to treat it as such, right? Understand that it's probabilities, so we need to manage our risk, but we need to have a trading model, right? We need to have a trading model. So now that we explained the trading model, we explained the risk management aspect and risk to reward ratio. Let's just come down here. Right? So we're going to be managing a 25K US dollar account with smart traded, skilled, no, not smart. Yeah, skilled funded traders, right? By Omar Paladin and Words of Wisdom, right? So skilled funded traders, right? So it's a 25K US dollar account, right? So the daily drawdown is 5%, right? So I'm not allowed to lose 1,250 US dollars in one day, right? And the overall drawdown is 10%, which is 2,500 US dollars. So I'm not allowed to lose 2,500 US dollars overall, right? So the profit target is 2,000. So we need to reach a profit target of 2,000 in order to pass phase one, right? So now the game plan now is this, right? So since they say I'm not allowed to lose, let me just get my pencil. I just want to start annotating now. So they say the daily drawdown is 1,250, right? So the mistake that most people make is trying to play around this number, looking at this number, which if you look at this number, it's not really far from this number, the overall drawdown. So the trick here is to reduce your risk, right? So we're going to be taking 0.6% per trade, right? So one trade, we're going to be risking 150 US dollars, right? So, but look at this 150 US dollars is far from the overall drawdown, and it's also far from the daily drawdown, right? So we're going to be risking 150 US dollars per trade, and with a risk to reward ratio of 1:3 minimum. We're just going to be having 1:3, and we could go for 4, we could go for 5. It's going to depend on what the market is giving us, right? So each trade we're going to be risking 150 US dollars to make 3 of that, right? So we're going to be risking 150 per trade to make 450 minimum, right? Wait, let me just check if I did my calculations proper. Hey, because I know mathematics is something else. Times 3, yeah, 450, right? Yeah, so it is 450, right? So if we're going to be risking 1 to make 3, so it's going to be 450, right? So now I want you guys to look at something, right? Before we can blow this account, in order for us to blow this account, we need to have taken like 16, I think 16 losing trades. Like we need to have 16 losing trades for us to blow this account. And also I just want to mention that we have no time limit on this, right? So there's no more this. There is no more this 30 days, right? So we have no time limit. So we can take, a month, 2, even more, just working on this, right? So remember, the key thing is having the right approach to this, right? So you need like 16 trades to blow this account or to fail this challenge, right? So which is, man, come on. 16 trades, that's too much. That's way too much, right? But now let's talk about win rate, right? Let's talk about the win rate, right? So the win rate minimum, we're going to need to have a win rate of 30%, right? So the win rate is now talking about this, your trading model, right? We're linking it with your trading model. So what is your trading model win rate, right? So at least it needs to be above 30%, right? So anything above 30% over a series of trades, you're going to be profitable, right? If it's over 30% and you're going for, okay, another key thing is going for this, right? Going for this with this, it's key. So an example that we're just gonna do, right, is we're going to have a sample size of 10 trades, right? We're going to have a sample size of 10 trades, right? So let me just do this. 10 trades. So 1, 2, right? So if you have a 30% win rate here, this means that you are only going to win 3 trades here, and then you're going to lose 7. Like imagine you're going to lose 7 trades and you're going to win 3, but at the end you're going to be profitable, right? So a key thing that we need to understand about our trading model is that the outcome of the trades are random, right? Remember, on a trade by trade basis, they're random, right? You're not sure if you're going to win the first trade, the second one, the third one, the fourth one. You're not sure. You don't know. But out of these 10 trades, you're going to win 3, you're going to lose 7, right? So for example, imagine losing the first 7 trades, all let it go. Trade number 1, loss. Trade number 2, loss. You'd be -7, right? And then you only win the last 3, right? So +3. So remember, when you're losing 150 US dollars, right? You're losing 150 US dollars. So it's going to be 150 US dollars times 7. That's equals to 1050, right? And then if you are winning only 3 of these, 150 times 3 is 140, and then having 3 winning trades, it's going to put you at 135. So look, you are net profitable, obviously with not a big margin, but you are net profitable. So I'm going to take this and then -1050. So $300 US, you are net profitable with $300 US, right? So it doesn't matter. So what we're trying to say here is having a win rate of 30% is important. It's like, at least it's the foundation, it's the start. It's the start, right? It's the start. But if it's more, if you know above, let's say 40% or 50%, that's when you're going to understand that you're going to have more in terms of your overall winning thing there, right? So it's all about managing your risk, having a consistent risk parameters here, and then understanding your win rate, right? So your win rate, the win rate varies, guys. It's different, week by week, month by month, it's different, right? So you can just have like an average, right? You can just have an average. So my average is 60, right? My average is 60% win rate, right? So if you do the math and then come to a conclusion, you'll understand like where we would end up, right? So I don't really want to make this video long, but I kind of like gave you guys like the blueprint that I'll be using coming into this challenge, right? So I'm going to record everything, the trades, everything, and then I'm gonna post them, and then we're just gonna be having episode 2, episode 3, going all the way up until we pass this challenge, right? But remember the key things that we have spoken about in here, right? So yeah, guys, I don't want to make this video long, and welcome to my journey. Yeah, let's kick some ass. Let's kick some ass. Oh, okay. The last thing also, it's the psychological part of things, right? The psychology, right? You need to have a stable mind, right? And understand that the outcome of each trade doesn't define you as a trader, right? Like we said, you could win the first 7 trades. You could lose the first 7 trades and win the last 3, and then over the long run, you are profitable, right? So it's important to just always keep that in mind, that you are not defined by that one trade, right? So even if you win a trade, it's not now you need to be happy, clapping hands, dancing and shouting on social media. You just want to trade. You could lose the next one, right? So it's always keeping a solid mindset. Keenan would be like, composure. You just have to be composed the whole time. So yeah, I don't want to make this video long. Welcome to my journey. Let's kick some ass. Danko.